Bring in senior markets correspondent Kevin Green to help us set up the action for today. All right, let's dive into. We've got some developments from the OECD cutting its outlook on both the U.S. and a global economic front. Take us through, distill what stands out to you from this new revised outlook.
Yeah, as you kind of talked about, the OECD did downgrade global growth projections here for basically a slowdown to 3.1% in 2025. That's down from 3.2% in 2024 here. And they're also looking at 2026 coming in at 3%. That's for GDP growth. The previous forecast was 3.3%. Now, when you're kind of looking at this is also downgrading U.S. growth just in general here. And they really do highlight the fact that tariff policy is going to impact the global economy. And even if they roll back these tariffs, they do believe that there's going to be an incremental impact when it comes to GDP growth. Not as much as what they're projecting right now, but it is something to kind of note. Basically saying the damage may have already been done for 2025 and GDP growth just in general here. Now, the OECD is a conglomerate of different countries like the United States, the United Kingdom, Germany, Japan, what have you here. And so kind of an interesting perspective, not really surprising. They're kind of aligning with maybe some of the Wall Street analysts that have also downgraded U.S. growth over the last 2 weeks. And it just kind of shows that the tariff policy is now starting to come into a better picture here when it comes to these projections moving forward. And we have, April 2nd, which is going to be, another 2 weeks from now?
2 weeks, yeah.
So anything can happen, and if we do see a backing off of these tariffs or maybe some softening type of rhetoric coming from the White House and among others, that could also be a little bit of a positive here. But unfortunately, like I said, even if they roll them back, the OECD does believe that maybe some damage has been done to the global economy because of this tariff war.
Yeah, and the expectation for the U.S., they're ratcheting down their growth outlook to 2.2% for this year, less than 2% for next year. How significant is this, KG?
We'll see. Right, there's a lot of organizations that put projections out, and sometimes they're not right. So there's still a long time to go here. There could be new things that do hit the market, and that could also just impact GDP just in general. If you kind of look at it, 2 years ago, no one was really expecting the whole AI trade. And that has had a meaningful boost in GDP growth just in general. So there's a lot of things that can happen, both good and bad, for us to be able to hit those targets. But it also may be a little bit of a warning shot to the White House and economic advisors that, unfortunately, we might be seeing a little bit of a slowing. And maybe that's just enough of a warning for this administration to act. We'll see.
Okay, and let's talk about what we're going to be hanging our hat on today. We've got retail sales coming up today. You take that into context of we had that consumer sentiment data on Friday. Now, I know that you said you wanted to drill down into that sentiment data to see how it broke down across, segments, basically, since they get the temperature of both Democrats and Republicans. It looked like there was a drop across the board, no matter the political party and also no matter the demographic. What do you take from that as we kind of go into retail sales and the expectations for today?
Well, if you kind of look at you're right. If you're kind of looking at consumer expectations as well as outlook on the Republican side of that report, you did see a drop to the downside. But you actually did see some stabilization, actually a little bit of a re-rating to the upside when it came to current conditions. So that was actually very interesting, but it was not a great print. Obviously, we are seeing some headwinds here. The consumer inflation expectations were also very high. You're sitting at around, 4.9%. And that is something that obviously is sparking a little bit of fear when it comes to the consumer. When you're looking at retail sales, what is very hard for a January print or even this print, which is going to be the February print, is the weather impacts. And a lot of that negativity that we saw in January may be related to weather. If you're looking at a slowdown when it comes to dining out, also when you're looking at gasoline sales, gas station sales and things of that nature, all of those things kind of contracted on a month-over-month basis. So you can maybe say, hey, a lot of that's weather related. Maybe we get a little bit more of a normalization in this report here. The market is actually expecting core retail sales to increase by 0.3% on a month-over-month basis. Last month, that dropped by 0.4%. And when you're looking at the headline retail sales, we're looking at the estimate sitting at around 0.6% growth. That's versus a drop of 0.9% last month here. What is also going to be very interesting is the retail control group. So this actually has a direct influence when it comes to GDP, and we will get an updated Atlanta Fed GDP Now forecast here. Let's see how much that's going to be adjusted. But I do want to kind of highlight that Atlanta Fed GDP Now, we got to be also mindful. They did put a little bit of a note out. Because of the massive influx in gold, physical gold to the United States, that's another reason why we also see a negative GDP print, because it was significant when it comes to the notational value of physical gold being brought in. So the Fed, the Atlanta Fed GDP Now forecast is also a little bit murky, and we have to kind of put a little bit of an asterisk for that, because the gold deliveries is something that's kind of once in a, let's say once in a cycle, once in a generation type of thing. And the last time we saw this aggressiveness when it comes to repatriation of gold was back in COVID-19. So a lot of economic data, a lot of factors that are just out of our control right now. And we'll see how the market reacts. If we do get a light print, that could probably bring some bearishness in the market right now.
And then for the S&P 500, we finished at 56.38 Friday. What are you expecting? What are you looking out for in terms of resistance and support for today?
Yeah, so to the upside, 5,700, to the downside, 5,500 here. And we have to be mindful too, if you're looking at the futures chart, the E-mini S&P 500, there's a roll of the contract, so you're now looking at the June contract. So if you look at the daily chart, you're going to see kind of this gap to the upside. It's not really a gap. It's just that prices, the continuous chart price is adjusting for the June contract. So overall, we're still kind of testing this resistance level of around 5630, give or take, on the S&P 500, and that was something that was a major resistance level last week. Let's see if we have enough in the tank to be able to break above that and try to rally higher here over the next couple of days.
All right, we'll see if we have enough in the tank. I wore green today. I mean, it's for St. Patrick's Day, but we'll see what happens, if it sends any vibes. Kevin Green, thanks a ton for the levels to look out for on the S&P 500 to the up and downside, 5,700 to the upside, 5,500 to the downside.